General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do this work. Okay. Monday. 6/9/25. I believe this is a no news day. This CPI week. There's no news tomorrow. Then CPI's on Wednesday. President Trump speaks at 4. Okay, that was been tentative. That wasn't there yesterday. He must come talk about California. They really going. I mean, let's be real. They blow up everything on the news. They had like California is in Armageddon. Trump speaks at 4 p.m. tomorrow. Let's look at CME Fed Watch. Okay, we're at 99% no change. That's about as high as it's going to get. There was no economic data today. At 10% no change. $85. We're leaning towards no rate cuts in July as well. In this news cycle, it hasn't been saying we need a rate cut. Looks like we having all kind of deals everywhere with China. That's pushing the sentiment up to we don't need no rate cut as well. Let's go here because even though it's not a big earnings week, we got to keep up the habits, the good habits. Go to earnings. GameStop. That dude doesn't pump GameStop no more either. Roaring Kitty. I think he went to Petco, which is smart because people love their pets. GME tomorrow. Dave & Buster's, that Pet Meds. That might be a good company. Nothing here to move the NASDAQ. Keep an eye on China deal. Let's go to dollar. This is way too long. Dollar on the daily. Still accumulating. A lot of times this euro can move while this is, euro's not moving like that. This has my interest on euro. Yeah, so this needs to go up here, which kind of lines up with my plan for it going to the volume imbalance. Still looking for a push up on the dollar. We could bounce off or fill the volume imbalance before heading lower. Let's go NASDAQ on the daily or NASDAQ on the hour. We just had a solid push-up day. Kind of choppy. Man, trading these choppy conditions. Solid push-up day, kind of choppy. I mean, a nice range overall, but not hitting any time frame level to find a pivot for the week. Previous month's high still doesn't have a close above it. They need to update TradingView again because I already seen the message I got and it's still showing I had a message. It's little things like that it's like bugs, but I understand fixing bugs it's a hassle. No, we still haven't got above or closed above. Previous previous month's high. Let's make sure. So we did just start a whole new month. Yeah, it is. I still think higher for the week. Higher for the week makes sense. And then fall to rebalance the gap. Let's go to the daily. Mm-hmm. Yeah, it's just very, very tacky. This first still makes sense, but this is like an inside day. Monday doesn't look that impressive. Inside day, Monday does not look impressive. It gives the engineered liquidity vibe. So target both sides. That's the old new week opening gap. It's Monday on the 4 hour. What is this? 9 a.m. Yeah, we never hit this low. I was targeting this low. 1 o'clock. Yeah, it's 1 p.m. Note this, because this happened today. This is the closing price of one. What's the closing price of 9 o'clock? Know how price respected the closing price of 9 a.m. Clear sign. You want it to go down. Overall, no significant arrays were created. And note the new week opening gap still needs down candles. We can't put too much emphasis on that because we got 3 or 4 or 5 new week opening gaps that need down candles to this day. Even here, we got a little down candle here. It's balanced on the 1 hour, but I'm not impressed. I say higher. We got a little retracement here. I don't like the wicks. I just can't stand price action that looks like that. Atrocious price action. I want to see Monday's low ran. And then higher prices. I want to be a buy this week. Especially when China deals are on the table. No, that's epically. So set the alert on Monday's low. Enter, just put fair value for buying. Yeah. Watching Monday's low. Looking for buys under price. Under lows. Okay. All right, that's that on that. Y'all have a good day. Peace.